Hello. Welcome to my channel, my dear friends. My name is Avilash and I'm your trader next door. In this video, I'll be analyzing the chart of USDCHF, US dollar, Swiss franc. So if you're watching my videos for the first time, then please subscribe to my YouTube channel for regular market analysis. And do not forget to check out the Forex analysis playlist on my YouTube channel for the analysis of other currency pairs. So let's get started. So this is the 4 hours chart of US dollar, Swiss franc. Yes, I'm in the most popular time frame in the Forex community, the 4 hours. And as we all know, after the FOMC meeting 2 weeks ago, USDCHF was trading in a tight, narrow range. It was trading in a tight, narrow range. And after the FOMC meeting, as we all know, dollar became very strong. And currency pairs like USDCHF, US dollar, Canadian dollar saw heavy buying pressure. And after that, the whole picture changed. Okay. Where currency pairs like Euro USD, Pound USD saw heavy selling pressure, where support levels were shattered, and in currency pairs like USDCHF, US dollar, Canadian dollar saw heavy buying pressure where resistances were shattered. And right now we can clearly see that this market is under the heavy influence, heavy dominance of the buyers, and therefore there is no doubt that this market is an uptrend right now. Overall, okay, overall the chart of USD CHF may be a bit uglier, but right now this market is an uptrend. See, retail traders like you, like me, we do not trade in the weekly time frame. We are not the big boys. We are traders. Our trades generally last for few hours, 1 day, 2 days. Therefore, we should mainly look at this chart only. Okay. So considering the overall chart right now, we can easily see that this market is an uptrend, and considering the thumb rule of the market following the trend, so this market is an uptrend. Therefore, we should only look for buying opportunities because this market is an uptrend right now. So if you short the market or if you go against the trend, then there is a possibility that you will be losing your hard-earned money. And I would like to show you one thing here. This is the Forex sentiment meter. If you have watched my other videos, then you know where to find it. And if you are new to my channel, then let me show you. You just go to the website avilashhajarika.com, my name, okay, and under Forex 101 section, you will find the Forex sentiment meter. And in the Forex sentiment meter, you can clearly see that 71% traders have taken short position, only 28% traders have taken long position. In this bullish market, in this market, 71% traders have taken short position, and this is the main reason why 90% retail traders lose money. 90% traders lose money because they do not know to follow the trend of the market. And see, this is the USD CHF, and see, they have mostly shorted the market at 0.9125. They have mostly shorted the market around at this place, okay, around at this place. When market was retracing a bit, they thought that the trend of the market has changed, and as a result they have shorted the market. But they forgot the fact that overall the market is under the dominance of the buyers, and as a result 90% retail traders lose money. And you should not make the same mistake because you are watching my videos. Anyways, I would like to show you one thing here. As I've clearly mentioned, that after the FOMC meeting, when dollar became strong, currency pairs like USDCHF saw heavy bullish pressure. Okay, then I would like to take you to the chart of DXY, US dollar currency index. And if you look at the chart of US dollar currency index, then you can clearly see that the chart is quite similar. Okay, quite similar to the chart of US dollar Swiss franc. This is the DXY chart, US dollar chart, and you can see that this chart resembles to the chart of USD CHF, and this chart is very bullish. Right now I am in the daily time frame, and I have clearly mentioned in my previous videos also, when market formed this massive candles, that market will be retracing, market will be going for a pullback, and market will be going up. And clearly you can see that as we have expected, market just went for pullback, and right now market is going up again, and this is the resistance of the market. Okay, until and unless market reaches this 93.35 level, US dollar should remain bullish. And but tomorrow NFP report is about to come. NFP report is about to come at 8 around 8:30 a.m. EST. Okay. So, and generally during after the NFP report release, market gets very volatile. Okay. If dollar gets very volatile, if dollar starts going up again, then this will be the resistance for the US dollar. If dollar goes down, then that's a whole different story. But you need to keep your eyes on the NFP report of tomorrow. Anyways, let's jump to the US dollar Swiss franc chart. Okay, because we were talking about this chart. So what should be a strategy then? One thing we have understood clearly that, okay, considering the trend of the market, we should mainly look for buying opportunities. We should mainly look for buying opportunities. Clear? Okay. Secondly, as I always say in my videos, that we should always look for area of value. Area of value is nothing but the best trading opportunity or the best trading spot. In an uptrend market like this, the area of value or the best trading opportunity is always near the support level. Whereas in a downtrend market, the best shorting opportunity is always near the resistance. This market is an uptrend, so we need to find out the support level. And right now we can see that this 50 moving average is trying to act as a support for the market. I will not say that this 50 MA is a very crucial support or very important support, but still we can see that 50 MA is trying to provide support to the market, or it is trying to act as a support to the market. And right now market is trading here. So you should wait for the market to come down to the support level. As I always say, never ever chase the market. Do not chase the market. Let the price come to you. Because if you go ahead and press the buy button here, then you will be compromising with the trading discipline. Because see, if you buy here, your stop loss will be here. And you can clearly see that, you can clearly judge by looking at the chart that your risk to reward ratio does not match. As I always say, never ever compromise with the trading discipline. Therefore, you should not buy here. And the stochastic RSI is also telling us clearly, shouting that the market is in overbought zone. Therefore, this is not the ideal position to buy. If you have got hard-earned money, then this is not the ideal position to buy. Wait for the market to come down to your price level. If you want to become a trader, if you want to become a profitable trader, then you should have the patience. You should develop the art of waiting. So wait for the market to come down to the support level. As of now, 50 moving average is the only support level in this market right now. So let's wait for the 50 moving average and let's see how does it react once it hits the 50 moving average level. Okay. Let's wait and watch. Because if I draw a trend line here, if I draw a trend line here, still it does not meet the criteria of trend line. So I'm not drawing any lines here. The 50 moving average is the only support we have in front of us right now. Therefore, only wait for 50 MA and just wait for it. If market comes and reverses or bounces from the 50 moving average, then you'll get the confirmation that yes, 50 moving average is a valid support and you can go ahead and buy at the support level or at the 50 moving average if it bounces. Otherwise, do not buy. But right now market is not in the ideal position. So let's wait and watch. So hopefully you've understood. If you have liked the video and found the video informative, give a thumbs up and subscribe to my channel for regular market analysis. Thank you so much. All the best. Take care. See ya tomorrow.